Hey everyone, welcome back to the channel. Have you noticed your grocery bill creeping up or gas prices hitting your wallet harder? That's inflation at work, and it could be silently eating away at your savings. In today's video, we're unpacking the impact of inflation on your hard-earned money, why it matters, and how to protect yourself. Stick around! This could save you thousands in the long run. Let's start with the basics. What exactly is inflation? Inflation is the gradual increase in prices for goods and services over time, which reduces the purchasing power of your money. Think of it like this. $1 today won't buy as much tomorrow. It's measured by indexes like the Consumer Price Index, or CPI, which tracks everyday costs. As of September 2025, the U.S. annual inflation rate stands at about 2.9%. That might not sound huge, but over years it adds up dramatically. Now, how does inflation specifically hurt your savings? If your money is sitting in a low-interest savings account, earning, say, 1% annually, while inflation runs at 2.9%, you're actually losing 1.9% in real value each year. It's like your savings are deflating. For example, imagine you stash away $10,000 today. At 2.9% inflation, in just 1 year, you'd need $10,290 to maintain the same buying power. If your account only grows to $100, you've effectively lost $190 in purchasing power. Compound that over a decade, and it could wipe out thousands, turning your nest egg into a smaller shell. But it's not all doom and gloom. Inflation impacts different people differently. For retirees on fixed incomes, it's a real threat, as pensions or Social Security might not keep pace. Young savers, on the other hand, have time to invest and outpace it. And in high inflation periods, like the spikes we saw in the early 2020s, it can force tough choices, like cutting back on essentials or dipping into emergency funds. The key takeaway: ignoring inflation is like leaving your money under a mattress. It loses value without you noticing. So, what can you do to fight back? Here are some practical tips to shield your savings. First, seek higher returns. Move beyond traditional savings accounts. Look for high-yield options or certificates of deposit that offer rates above inflation. Right now, some online banks are paying over 4% on savings, giving you a buffer. Second, invest wisely. Stocks, bonds, or index funds historically outpace inflation over the long term. For instance, the stock market has averaged about 7 to 10% annual returns after inflation. Diversify to spread risk and consider inflation-protected securities like TIPS, Treasury inflation-protected securities, which adjust with CPI changes. Third, budget smarter. Track your spending to cut unnecessary costs, freeing up more to invest. Apps like YNAB or PocketGuard can help. And don't forget to negotiate bills or shop for deals. Every dollar saved fights inflation's bite. Fourth, build an emergency fund with inflation in mind. Aim for 3 to 6 months' expenses, but keep it in a liquid, interest-bearing account to minimize erosion. Finally, stay informed. Inflation fluctuates. It could dip below 2% or spike again, so review your finances quarterly. Tools like inflation calculators online can show projections for your savings. There you have it, folks. The real impact of inflation on your savings and actionable steps to stay ahead. Remember, knowledge is your best defense. Start applying these tips today and watch your wealth grow in real terms. What are your thoughts? Has inflation hit your savings hard lately? Share in the comments below and tell me your top strategy for beating it. If this video helped, give it a thumbs up, subscribe for more personal finance insights, and hit the bell for notifications. Thanks for watching. See you in the next one.